Hello and welcome to the latest episode of BBI LatAm. This is the video series from Bradesco that explores investment trends in Latin America and across emerging markets. I'm Ben Laidler, the head of equity strategy at Bradesco BBI in London, and I'm joined by my research colleague Marcio Osako from Sao Paulo, who covers the healthcare and education sector. So we have the pleasure today of being joined from Miami by Eilif Serck-Hanssen. He's the CEO of Laureate Education. Laureate is the largest private education operator in both Mexico and Peru, focused on the university sector. Despite Mexico and Peru being the focus, the stock is only listed in the United States on the NASDAQ under the ticker LAUR. This makes it a little bit less known for LatAm and EM investors than it deserves, and was the genesis of the invitation today. So just before we kick off, I want to start with a few numbers just to set the scene a little bit. So first up, $4.3 billion. That's the current market capitalization of Laureate. Over $30 million. That's the average daily traded volume of the stock over the past 3 months. And then finally, 511,000. That's the total student enrollment of Laureate across its universities in Mexico and Peru in the just reported third quarter, where management also raised their guidance and boosted their share buyback program, but that's us just getting ahead of ourselves. So anyway, that's enough from me. Eilif, thank you very much for coming on today.
Thank you, Ben, for including me.
So great. Before we dive into the business, we like to start with a little bit of your background, really. How you came to Laureate, how you came to the education sector. Tell us a little bit about yourself.
I'm a Norwegian national. I got educated in the UK. I started off my career with the PwC in London. Then I joined PepsiCo in New York. And I got to see the best and the worst of PepsiCo, traveling internationally for them, and having seen various operations. They sent me to start Pepsi's operation in Vietnam after the US trade embargo lifted. I spent nearly 6 years at PepsiCo. Then I joined the airline industry and spent 12 years in the airline industry before joining Laureate in 2008. And you may ask, what's the path from the airline industry and consumer goods to higher education? But let me try to connect the dots for you. Higher education is a consumer-driven business. So a lot of commonality to my background at PepsiCo. It's also a highly regulated business like the airline industry. It's capital intensive like the airline industry. And it has a large workforce, again, very similar to the airline industry. It also is perishable goods. You can't sell yesterday's empty airplane, and you can't sell yesterday's empty classroom. I think the biggest difference between higher education and the airlines is that the airlines is a business that is very disciplined, very data intensive, and leveraging information systems and a highly analytical approach for decision making. So when I joined Laureate in 2008, I saw a lot of commonality, and I saw a lot of opportunities to deploy the business practices that has been so embedded into the airline industry, into the education industry, in terms of capacity utilization, in terms of productivity measurement, in terms of innovation to drive scale benefits. And it's really been one of the most remarkable impacts at Laureate. When I'm looking at what really distinguishes Laureate today from many other education companies, is that we have been able to really industrialize higher education, meaning that we have been able to put scale and quality hand in hand at Laureate, which gives us a huge competitive advantage when it comes to delivering high quality, affordable education to the emerging middle classes in Spanish-speaking Latin America.
That's fantastic. Marcio, over to you.
Sure. Thanks, Ben. Thanks, Elif. Could you give us an overview of Laureate Education? I mean, its mission and core business areas, and how it differentiates itself in the higher education landscape, please?
Yeah, sure. So as Ben alluded to, we have 500,000 students, a little over 500,000 students, about 250,000 students in Mexico and 250,000 students in Peru. We focus on the emerging middle classes. I like to say we're in the business of expanding the middle classes, and we're doing it through education, and hence the affordability equation is very, very important for us. Of the 500,000 students, 400,000 students are young students in traditional campus setting, and 100,000 are working adult, 100% fully online students. And so we have developed, strong brands, but offering the product through a multi-channel platform, being both through campuses for young students and through fully online for working adult students. We are all about delivering high quality at affordable prices, and we are really doing that through what I mentioned earlier, scale economics. That has enabled us, to grow a double digit. We have $1.7 billion in revenues, and we're guiding towards 30+% EBITDA margins, and 50% of EBITDA converts into free cash flow. So we're a very cash accretive business model. It's also important to note that our business in Mexico and Peru are essentially 100% private pay, which makes the regulatory environment much less than where you're operating in, like in the United States, and what it used to be like in Brazil when you had the FIAS program, which made the regulatory environment much more intrusive. We also have developed a segmentation strategy at Laureate that is very, very important. We have a premium brand, which is priced at about $4,500 per year. And then we have a value brand that is priced at about $2,500 per year. So if you think about the socioeconomic pyramid, the very top of the pyramid, we are not serving. That is being addressed by very elite and selective universities, or parents who are sending their kids overseas for an education. But if you don't have a lot of money, but you have a little bit of money, then Laureate is designed to serve your needs. So that $4,500 for the what amount to a full service university experience, where you walk into the campus and you will have sports facilities, you will have cafeteria, you will have a lot of green space, very much like a campus experience that most of us are familiar with. And if you can't afford $4,500, but you can afford $2,500, then you get exactly the same robust academic experience, but it will be in a more no-frills environment, where there will be campuses that consist of, there will be classrooms, there will be laboratories, there will be libraries, and there will be a little bit of administrative space. But it is, akin to a more non-frills environment, but it enables us to give the same high quality education for 40 to 50% lower price point. And those are all for the young students. And then for the working adult students, through both brands, we are offering that fully online, convenient digital experience, and also is priced about 40 to 50% below their face-to-face counterpart pricing.
That's great. I mean, and if I'm just sort of thinking about your sort of top line or the long-term drivers of this business, I mean, is this just demographics? Is this is there a sensitivity to the economy? I mean, do I need economic growth for the for the business to do well? Is there something else? I mean, what are those sort of couple of main top-down drivers?
I would say that the biggest growth enabler is rising participation rate among young students and broader market penetration of fully online education for the working adult students. So if you think about our growth algorithm, we grow about 2.5 to 3% per year from just same store, which is really driven by the rising participation rate. In Mexico, the percentage of 18 to 24-year-olds attending college is about 35%. In Peru, it's close to 50%. In the United States, it's over 60%. So just as that participation rate and just naturally rising in both countries, that gives us a same store growth at 2.5+%. Then the fully online student is in the United States, 25% of all university goers are attending fully online offering. In Peru, that is less than 5%. In Mexico, it is 14%. So there's a significant growth potential in that working adult fully online segment in both markets. And so that is adding about 2 points in growth to us. So just between same store growth and increased penetration in fully online, we're growing 4 to 5 percentage point in volume growth per year. And then the third building block to our growth algorithm are new campuses. And we opened up 2 new campuses this year. We're opening up 1 next year. And if you assume that we're launching 1 to 2 new campuses per year going forward, that would add another 2 points in volume growth. We currently have 50 campuses in our system. So adding 1 to 2 new campuses would give us that 2 points in growth. And so then you're seeing basically volume growth of somewhere between 6 to 7%, and then you add inflation pricing on that at about 3%, and then maybe you deduct 1 point in mix shift as we're growing faster in the fully online than the face-to-face segment. And so you're seeing top line growth in high single digit, so 8 to 10% top line growth. And then through productivity initiative and scale benefits and operating leverage, you are getting an earnings growth comfortably in the double digit low teens.
That's great. And just on the economy, I mean, I'm always in 2 minds as to how sort of pro or counter-cyclical sort of education is. What's your experience been in Mexico and Peru?
In Mexico and Peru, education is close to 100% private pay, which means that we are loosely correlated with the overall economy. So in good economic times, we are growing really, really strongly, both in terms of volume and pricing power. In weaker economic times, it's still growing pretty good. And what the growth algorithm that I just shared with you was based on kind of like the average of a full cycle. And then in a recessionary environment, as you may be aware, in the second half of 23 and early 2024, there was a recession in Peru, the first recession in 20 years when you exclude the COVID situation. We saw our business basically going sideways on volume, and for about a 9 to 15 month period, and then really, really strong recovery after that 9 to 15 months, depending on the brand portfolio, where that pent up demand of people who couldn't go to college during the peak of the recession are snapping back and coming back into the system. Again, I would describe it as loosely correlated with the economy. Yeah.
Great. Thank you. Marcio, over to you. I think you wanted to delve deeper.
Sure. Yeah. What does the rise of artificial intelligence means for large business model and operations, particularly in terms of enhancing student outcomes, optimizing costs, or transforming the learning experience?
So really, there are four big implications of AI in higher education. First and foremost is, what is it that we are going to educate? The jobs are going to change in the future, which means that we need to make sure that we update our curriculum and launch the programs where the growth are going to be for the future. And so the way that we're addressing that is we have very important advisory boards in both Mexico and Peru, and we're very connected into overall industry trends, both in Latin America as well as in developed markets, to determine what kind of new courses we should be betting on going forward when it comes to innovation. But then in the business itself, there's also three important opportunities and levers for AI. First and foremost, it is using AI in the classroom in order to improve the academic experience, improving the student outcomes and the overall success rate for our students. Secondly, it is leveraging AI in the commercial pipeline to optimize the lead flow and optimize conversion to bring down the cost of lead generation and cost of acquisition. And then the third area is back office, using AI as a tool to drive down the cost of accounting, collections, and other back office activities. And when it comes to, we started investing quite heavily in AI capabilities 3 or 4 years ago. We started in the commercial pipeline, and we are today recognized to be in the top decile among consumer goods companies globally in deploying AI in lead generation and conversion optimization, which has enabled us to grow very robustly, both for face-to-face students and online students, at significantly reduced cost of acquisition. So it's been a very important enabler for us to develop affordable growth opportunities for Laureate. Second area of focus for us has been to put a digital tutor into the classroom, a digital companion, an AI-enabled companion for each of the students. And our objective there, of course, is to democratize education and personalize it in a way that helps the most vulnerable students, or increases the probability of more vulnerable students to be successful in staying on and graduating and moving on to great career opportunities. I would say that we're the absolute leading AI-enabled operator among universities in Latin America, and we're looking for inspiration really from the best in class when it comes to AI enablement in the classroom from certain European and US universities, and we are making this a very important priority and focus for a future growth rate in terms of being the absolute dominant university in AI-enabled learning tools. And then the last area, which is the productivity in the back office, that's probably where we are. We haven't invested as aggressively yet, but we are upgrading all of our systems. We are organizing our data lake. So when I'm looking at 26, 27, and 28, that will be a further opportunity for us to drive further margin expansion opportunities through efficiencies in the back office that will be enabled by AI-enabled tools.
Fascinating. I did want to ask you, just going back to your sort of two core markets, they sound similar in many ways, but also you've touched on some of the differences already. I mean, the participation rate in Mexico seems to be a lot lower than it is in Peru. Online seems to be a lot lower in Peru than it is in Mexico. I just wondered if you could sort of compare and contrast some of the differences in the markets and how that impacts your business.
Yeah, no, absolutely. Peru has been a remarkable story. If you look at over the last 20 years, the Peru economy has been growing at twice the rate of the rest of Latin America. And they've done it in a very fiscal sound way. So the debt as a percentage of GDP in Peru is half of that in the rest of Latin America. And that has really caused the participation rate to go from, mid-20s, 20 year ago to now being close to 50%. It's really been, astonishing. While the economy in Mexico, it's a larger economy, it's 135 million people versus 35 million people in Peru, but it has not had the same success rate when it comes to economic growth. But Mexico has some very important advantages. It shares a border with the United States and hence is uniquely positioned to be the dominant trading partner for the United States within the context of USMCA and the new world order when it comes to global trade. So I do think the economic prospect for Mexico very, very positive, which I think is going to enable Mexico to grow at a faster rate going forward than what it has in the past. And that is going to be a very positive factor for its future growth or increase in participation rates. In terms of the working adult and fully online segment, Mexico modernized its higher education laws in 2016, 2017, and that enabled the fully online segment to start grow in earnest in 2018, 2019 in a pre-COVID environment, and then post-COVID has continued to propel forward. In Peru, fully online was really not permitted until post-COVID. And the higher education law vis-a-vis fully online didn't stabilize until I would say 2023. And so in 2023, we launched programs that we wanted to launch in the working adult fully online space. And we ramped that in 2024 and 2025. And, the growth rate in Peru in fully online is tremendous, but from a smaller base. But I expect over the next 3 to 4 years, Peru should be able to catch up to where we are in Mexico. So that's an exciting growth opportunity. And then also, I would say a very big difference between Mexico and Peru is that in Mexico, there are 20 plus cities with multi-million population bases and hence, very attractive, market opportunities for us. While in Peru, there's, Lima is a massive city, but the secondary cities in Peru, there's only a handful of them with multi-million people populations. So when I'm looking at the growth trajectory and the potential cities or locations for new campus launches, in Mexico, I can see, 20 new campus launches between our two brands in Mexico to really have nationwide coverage, while in Peru it maybe is half a dozen. So the growth potential for Mexico, particularly vis-a-vis young students in a campus setting, is much greater than that in Peru.
Got it. Marcio?
Yeah, what's your common misconception about Laureate that you think that investors often overlook?
I think investors, not all investors appreciate the strength of our brands. I think the one thing that I'm most proud of that we've done at Laureate is to build a quality education at affordable prices. And we have the number one university brand in Peru, and we have the number 2 private university brand in Mexico. And in Mexico, we are twice the size of our nearest competitor. And in Peru, we are 1.3 times the size of our nearest competitor. So that ability of being the biggest and the best when it comes to quality, outcome, and impact, and at delivering that proposition in a very affordable manner, I think is something that may have escaped some of the investors. I think there's a common notion that many of the publicly traded education groups are less differentiated when it comes to brand positioning and brand recognition and quality in the market. While in Mexico and Peru, that's not the case. We control the top brands in both markets, and that ability to have quality and scale going hand in hand is a real differentiator for us that I'm not sure every investor is fully appreciate.
Fascinating. Okay, we're coming towards the end here, but we typically have a quick fire round. So shorter answers to shorter questions, just to make sure we cover everything. So I guess first question, sort of main strategy focus. Is it growth? Is it efficiency? Is it innovation? I mean, what's the one thing that you're really pushing the business for right now?
It is growth through innovation. I would say the last 7-8 years, we have focused on productivity. We have industrialized higher education. We have really built an operating model that is designed for scale. And so where we are today is to really take advantage of that infrastructure and really grow and innovate, launch new products and degrees, and serving new communities through new campus locations.
Got it. And capital returns, dividends, buybacks, neither, both?
I would say both. Over the last since 2019, we have returned nearly $3 billion of capital to shareholders, 1.7 through cash distributions, and 1.3 billion through stock buyback. I would say last couple of years we've been more indexed to stock buyback. We just last week announced an additional $150 million stock buyback program.
Right, and I guess we haven't touched on this yet, but there's risks in every business. I mean, if you had to sort of highlight one or two here, what is it that keeps you awake at night? Is it regulation? Is it competition? Is it macro? Is it tech disruption? I mean, what are the concerns or the risks here?
I would say our strength is our brands, and hence from a competitive perspective, I really like our position. We are also the absolutely undisputed leader in digital capabilities in higher education. So the tech opportunities, whether it is digital or AI enabled, I think are areas where we are just naturally going to win in that space. So that leaves me. I'm more concerned about the macro environment. I can't control that. We've built a very variable cost model to make sure that we can ride good times and bad times equally well. And then, of course, I'm always concerned about the regulatory environment. We are operating at the behest of the government. We have licenses and accreditation. We've built a culture of being compliant from a regulatory perspective. So it's a strength that we've built through culture, through our culture building effort. But that is going to be always a focus and a concern to make sure that we maintain that strong compliance culture in the company.
Fantastic. That's probably a good place to end. Eilif, thank you. That's been absolutely fascinating to learn about the company. Thank you very much for joining Marcio and I to discuss Laureate Education. That was another episode of BBI LatAm, the Bradesco video series explaining investment trends across LatAm and emerging markets. If we've whetted your appetite and you want to learn more about Laureate, please head over to their website at laureate.net. So thank you, everybody, and goodbye.
Thank you for including Laureate in this series.
Thank you.